Okay, good morning everybody, and welcome to the AM video edition of Traders Espresso for Tuesday, February 20th, 2018. So it's been a 3-day President's Day weekend, and traders are coming back to what I think are some mixed signals. The Asian indices were mostly down overnight. The European indices currently are mixed. France and Germany are up and the UK is down. The futures are down at this hour. They're signaling a lower open. The futures indices are down anywhere between 60 basis points and three quarters of a percent. So 0.6%, 0.75%. The VIX and the VIX futures are both up. The VIX is up above 20 again. It just went down below 20 on Friday. Treasury yields are signaling higher. They're currently at 2.893% on the 10-year. The dollar is up 52 basis points, so about 0.5%. It was up 0.6% just a little bit earlier. Now, what's interesting or what's noteworthy is that the U.S. Treasury is auctioning over the next 3 days. The U.S. Treasury is auctioning off about $258 billion worth of bonds to fund the current deficit. So, the question is, not will they be sold, but at what yield are they going to be sold at? And if there's tepid demand, that's going to drive yields higher. So potentially maybe even above 3% on the 10-year. So be watching that today. That is an area of some controversy, the 3% handle. Some commentators and analysts are saying that's going to be bad for the stock market, and others are saying, well, you're not really going to see pain until 3.5% or maybe even 4%. So that 3% level, though, will be closely watched. Energy commodities are up. Agricultural commodities are up. Metals are down across the board. Copper, silver, platinum, gold are all down. The gold is probably down on a strong dollar. But the fundamentals are not, driving it up. You would think that with concerns about a soft open on the stock market and, volatility being higher, that safe havens like gold, would be up. The yen, when I looked at it, was actually down. It's been weak kind of over the weekend when, the currency markets and futures open back up again. The yen is down, at least on the yen futures are down about 0.5% right now. So taking a look at our chart for the S&P, this is kind of the one that I went over in the weekend video edition of Traders Espresso. I drew 3 trend lines. This was the first trend line that was drawn. This was the second trend line that was formed. And then this one here was the third trend line that was formed. The third trend line right now has been violated, so I'm going to mark that as a past trend line. It's not really one that we're concerned about, but the one that we are concerned about currently is this one right here, the second trend line. The S&P closed above it on Friday's action, and given that trend line and the primary trend line that was formed, we're looking at 3 areas for the S&P to travel to. One is right here, obviously. I mean, it's either going to travel up, sideways, or down. What's the market going to do? It's going to fluctuate. We know that. Right now, it's looking like it might be trending towards this area right here, which is the midpoint of the current price channel. And what's concerning is that that midpoint has not really been effective as support or resistance. You can see that the S&P traded below it here, traded right above it the next day, closed above it, and then the following day traded right below it. It took 4 days to get back up to that point and just traded right through it on the 14th. And now it's, obviously closed above it, for 3 consecutive days. There's nothing stopping the S&P from trading down. I mean, even though it penetrated this trend line, it could have traded down on this side of the trend line, but it's also, being on this side of the trend line, now it's going to trade down. It's just probably going to stay on this side of the trend line, but there's nothing stopping it from trending down. Just because it's above that trend line doesn't mean it has to trade up. It does not. There's nothing saying it has to trade up at all. And if it continues in that way, it could also trade, below. It could trade down here to the bottom end of the channel. And it's 7:30 right now. The opening bell just rang, and we can see today's bar forming. It's forming downward. So the S&P futures are down 40 basis points right now. The Dow Jones Industrial Average is down 130. The index is down 25. The composite is down 27. The S&P is down now only 10 points, so it's 38 basis points, basically 0.4%. And the Russell is down 0.47, so just about 0.5%. So that's kind of what we're dealing with today. It'll be interesting to see what the indices do in the morning session as the morning session drags on. The first 15 minutes is going to determine, I think, what these futures are, or what these indices will do for the remainder of the day. So let's draw a 15-minute chart here. Pay attention to what this chart does right here. Okay, this 27, 20, 50 level, what's interesting is that the index traded all the way down to that level and then reversed. And the reason why that level is meaningful is, and it really isn't all that important, but that was about where the S&P futures had traded down. And I think they traded a little bit below that level. Or we can just wait. If you paid attention to earnings, talking about mixed signals, Walmart and Home Depot were both retailers that reported today, both big box retailers. Walmart disappointed, Home Depot impressed, so Home Depot was up, in the pre-market. And it's up, almost 2.5% today. Walmart not so lucky. It guided. I shouldn't say it guided down. It reported disappointing revenue, reported disappointing earnings. It's up from where it was in the pre-market, but it's down almost 7% from the close on Friday. Walmart reported disappointing earnings, disappointing revenue. Further detail that was provided on the call gave evidence that gross margins in the holiday quarter were being squeezed, and e-commerce sales slowed down. So naturally, the big focus on Walmart is, can they compete with Amazon? Well, if gross margins are getting squeezed and if their e-commerce is slowing down, then the answer seems to be no, not with how they're currently running things. So a lot of focus is going to be on Walmart. I'm sure some analysts will weigh in on it either this afternoon or tomorrow. So I probably wouldn't touch Walmart right now, because you never know. Analysts can come out and go ahead and reiterate their recommendation on Walmart, and reiterate the price target or what have you. So I don't know that Walmart is necessarily a sell at this point. So anyway, that's kind of how things are shaping up this morning. It'll be an interesting day. It'll be interesting to see. That definitely will be interesting to see that Treasury auction on the 20th, 21st, and 22nd. So on the 22nd, we'll be talking about where things have shaken out. Have a great day trading, everybody, and thanks for tuning in.